We've described it to investors recently as we're walking across a pond in the winter, it's frozen, and there are cracks that are starting to emerge, and a lot of people think they're going to make it across the pond without falling in. I'm not quite so optimistic. I can hear those cracks very loudly in my ears this month.
If you were to pick one name that sort of crystallizes that view, which is it?
Well, I can't get into specific names, but I would say the semis is one that, has really gotten caught up in these trade issues and some other questions on fundamental demand and whether or not that's eroding. That was a segment of the tech sector that looked pretty reasonably valued, had a little bit of a froth that was taken out, but it was extraordinarily crowded in hedge funds, and you started to see them rotate out.
Mike, with all these trade headlines, now escalation in terms of tit-for-tat tariffs between the U.S. and China, I mean, we've got the Dow up 85 points right now. It's led higher by names that do have exposure to China, like Nike, like Intel, like Caterpillar. Is this priced into the market?
Yeah, I don't think you could say 100% this proves it's priced in entirely, Morgan, but I do think it tells you that when the market has lived with a particular threat for 6 or 8 months, and we've worried about it and talked about it, and parts of the market have been punished for it, it doesn't come as a surprise when you get the reality. Now, we were down 0.5% in the S&P yesterday. We're up 0.5% today. Nobody says this is the final verdict on whether this is going to hurt or not. I do think, though, that one of the mechanisms where it was really going to hurt, if it was going to, was fears of a severe China slowdown, disorderly kind of chaos in the capital markets, a dollar rallying hard. None of that's going on right now, so you don't have that channel from trade fears to today's stock market the way you might otherwise.
I would say I think Mike hit the nail on the head. I think it's probably been mostly priced into industrials, not fully, and now you're starting to see it seep into tech. Think back to the second quarter. Tech actually rallied really hard because it was supposed to be the safe haven for all these trade fears. Nobody's saying that anymore.